Good evening, everyone. Hello and welcome to the StartupJobIn UpX Masterclass Series, where we bring masters from different fields to share their insights with you. I am Kavita Joshi, associated with StartupJobIn as Public Relation Manager. I will be your host and host for today's evening. StartupJobIn is a dedicated job portal for startup and MSME. We are trying to automate the entire recruitment life cycle for the startup employers. Our company started in May 2019. The beta version of website was launched on 1st May 2020 on International Labour's Day, and full-fledged version was launched on 15 August. Masterclass Series is a weekly learning platform to provide specific tips to recruiters, startup founders, and job seekers. UpX is about sharing the topics for the benefits for the foundations. Today we are going to discuss on the tax benefits for the startups. It's been said that in preparing for a battle, plans are always found to be useless, but planning is indispensable. If you have a startup plan, it's very important that you do full-fledged planning about your plan to execute it. Tax paying is one of the most important areas which requires your thorough planning. Today, we have Mr. Ankur Tyagi with us, who is going to talk about tax benefits for startups. He will tell us how startups can make use of them and make the best out of it. Allow me to introduce Mr. Ankur Yadav. Mr. Ankur Tyagi is a tax investigator by profession, currently working at Department of Revenue, Ministry of Finance, possessing 9 years of work experience traversing across diverse industries, including information technology, hospitality, entertainment, event management, arts, culture, taxation, laws, and public sector. Thank God, the list has ended. He is a Toastmaster for 1.5 years and club level winner and area level runner up at international speech contest at Toastmasters. He is also an avid tracker, an instinctive runner, and a psychology enthusiast. Now, let's start the discussion about the very interesting topic of tax benefits for startups. This session is structured in two parts: 15 minutes for the speakers, speakers talk, followed by 15 minutes is for the audience to ask the questions. So let's hear our honorable speaker today, Mr. Ankur Tyagi, on tax benefit for startups. Over to you, Ankur.
Thank you. Thank you so much, Kavita, for that lovely introduction. And thank you so much, StartupJobIn, for giving me this opportunity to share the benefits that the startups can avail in the tax departments. Kavita has already given my introduction. I'd just like to add that I am currently working at Directorate of Investigation, which comes under Central Board of Direct Taxes. And my work typically involves investigating tax evasion. Today, I shall be sharing about the tax benefits that are available for startups. The government of India is really doing so many things for the startups, for people to venture into this area, to realize their dreams, to create something new, to innovate, to basically provide solutions to the problems that the world is facing. Startups. This StartupJobIn itself is a startup, and we know a lot about startups. Probably some of us have also worked in startups. And as Kavita rightly said, that it is important to plan. And I think one of the most important significances of this session is that somewhere down the line, every one of us must have dreamed of starting our own venture. And all the targeted audience of StartupJobIn and the people who are trying to start their careers with startups will also face that desire to sometime somewhere down the line start their own venture. And this is when this session comes in very handy, because money is all the more important when it comes to startups. So you need to plan the launch of your startup. But in order for you to sustain your startup, it is important that you get to know the benefits, the privileges, and the relaxations given to the startups by the government of India, and specifically the Department of Revenue in terms of tax. So I shall be sharing my screen now so that I can give you a better insight into the benefits provided for these startups. Allow me a moment. All right, so we get started, but before I proceed further with the session, I have a disclaimer to announce. And I would like to clarify that I'm here to present factual information and insights into the benefits offered by the government of India to startups in India. Whatever I present, speak, and do during this session, I will be doing so in my personal capacity. And this in no way represents views or opinion or stand of the government of India. The session is not to be treated as being conducted in my official capacity. The views, the opinions, the statements expressed are entirely personal. So now that we have got that out of the way, let's get to know something new about the benefits available to startups. Now, before we actually, get down to the benefits, I would like to say, what exactly is a startup? How do we perceive the startup? So anyone out of you, if you can just, tell me your definition, your perception of a startup. Toastmaster Rahul, if you can say something.
I feel starting something from the scratch.
Yes.
You have an idea and you begin thinking, starting a company with your idea.
Absolutely. That's correct. Starting from scratch, that is the main thing. You're starting from the scratch. You don't have any existing business. You're starting from the scratch and you have an idea. You probably have a possible solution to an emerging problem that the world is facing. That is one of the ways to put what a startup is. Anyone else? Our CEO, Uma Shankar, he's the CEO of a startup. So, Mr. CEO, what do you think a startup means?
So, a startup basically a new venture which is, trying to do something. It's kind of business in initial days.
All right. Yes, absolutely. A startup which is just trying, as an organization, trying to find its feet in the respective area, in the respective vertical that it is a part of. Definitely, I think that's the best way to put it. And of course, we have our host as well. Kavita, what do you think of startups?
I think startup is basically some idea where you need, finance and through any means to actually make it real. That dream or that idea, bring into reality. That is something startup. This is what I understand by it.
Great. I think this is one definition that is really different from the ones I have heard. So we have really, summarized the startup in terms of idea, in terms of a new organization, in terms of finding a solution to the world's problems, in terms of finance. That's Kavita talked about that. Yes, startups need finance. And that's what today's session is all about. Finance, money, how to sustain a startup financially. Now, these are all the definitions which actually talk about the essence of a startup, but to avail the tax benefits, to avail all the privilege that the government is offering. We have to go by the legal definition of a startup, because if you satisfy as an organization, if your startup satisfies all these conditions, this whole definition, then only you can avail the benefits that is being offered by the government. And this definition is given by the Department for Promotion of Industry and Internal Trade. It is a department which falls under the Ministry of Commerce under the Union of India. And let's see how this department defines a startup, because that's all that matters when it comes to saving tax. So, an entity is a startup up to a period of 10 years from the date of its incorporation. So, like we were talking about, that it's a new entity. And the definition of a new entity, according to DPIIT, is that it should be within a 10 years period from the date of its incorporation, from the date from which it commences operations. Up till 10 years, it will be considered a startup. After that, if the company sustains, it will not be a startup anymore. And there are certain other conditions. Let's see, what are they? It should be a private limited company, a partnership firm, or an LLP, that is a limited liability partnership. The turnover, I think this is one of the other things about startups. Startups are not meant to be big. Startups are not meant to be huge, because then they become well-established companies. So the turnover should not exceed, in a financial year, the turnover should not exceed 100 crores. Now, let me clarify. This limit was 25 crores only until the last budget. In the budget of 2020, the Finance Ministry has raised this limit from 25 crores to 100 crores to include as many startups as possible. So there, the government is doing everything it can to include, to widen the base of the welfare for the startups. The third condition is that the startup should achieve innovation, development, or improvement in any product or services that they are offering. It's very important, because the whole idea of a startup is, like we were saying, to offer a solution towards problem. We already have established companies, selling cars and bikes and say airplanes. But if a startup comes with a solution, or comes with a bike which runs, say, on a biodiesel or on a renewable or non-renewable resource, which is not really being exhausted, then that will be a true epitome of a startup. All right. I think that's the one point that clearly tells us that why the government of India is supporting startups so much, because they have high potential of employment generation. That's one thing. Everything has a logic. Everyone says that nobody gets a free lunch. The government supports startups because they have the potential of employment generation, which in turn helps the economy and helps overall improve the per capita income and the GDP of the country. So that is why all these benefits are being offered. Also, it has potential for wealth creation, because, mind you, startup employs people, startup generates revenue, startup generates profits, and all this leads to collective as well as individual wealth creation. Now, this is something very important in order to prevent the misuse of the benefits being offered, and that is the startup should not be split up, or should not be, reconstruction of an existing business, because then it is not a startup actually, and it's just a way, a loophole. It would be kind of exploiting a loophole in the law in order to, keep extending those benefits till eternity. So you can avail those benefits only up till 10 years of your existence. And that is why a startup should not be split up, it should not be reconstructed, or it should not be a formation of a company or renaming of a company but actually you're running an old business. That should not be there. Otherwise, you won't get the benefits being offered. Now, why do we need startups? I think we have covered a little bit of that, but let's get into it. Why do we need startups? Again, I need a little help from my fellow organizers from StartupJobIn. So anyone, why do we need startups?
Again, I believe you have a unique idea and you want to just build something from that unique idea. You want to really help the society with your idea.
Great. Actually, yes, that is right. That is one of the reasons. So let's get into it. Why do we need startups? We need startups for creation of value. Because let's face it, a lot of apps we use, a lot of programs that we access over internet, which actually provide services to us, they most probably will be products or services which have been launched within the last 5 years. So they create value for the consumer, so that consumer can access it and make their lives better. We already discussed startup create jobs, startup generate employment, startup help in improvement of GDP. Startup also leads to creation of wealth, like we were saying. Individual savings leads to creation of individual wealth. Collective profits of the company leads to generation of collective wealth. Promotion of free culture as well, and that is one of the great perks of being in a startup. They offer you freedom. They offer you flexible working hours. They offer you to work according to your ideas. They have very less restrictions as compared to the well-established multinational companies. So because of all these, we need startups. Now let's dive into what is it that matters, the tax benefits for startups. So starting with the first tax benefit, it is exemption from angel tax. Now, what exactly is angel tax? We know about angel investors, but what exactly is angel tax? It is a tax under Section 56 of the Income Tax Act. The angel tax is that when a startup issues share which are more than the fair market value of that share, then the difference between the fair market value and the inflated value on which the shares were issued, this difference is taxed in terms of angel tax. But the startups are exempted from this angel tax. The funding or the issue of shares, it can be issued to resident angel investors or even funds not registered as venture capital ones, and even investments made by incubators. We see incubators in educational institutions and the like organizations. Even those organizations can be issued shares, and we can have, avail the exemption from angel tax. But certain conditions have to be satisfied for this exemption. One of the conditions is that the startup should be registered with Department of Promotion for Industry and Internal Trade. For every benefit that you want to avail, your startup should be registered with this department. The other condition is that the aggregate paid up share capital should be less than 100 crores. So after the issue of shares, still the capital of your startup, the aggregate capital, including the existing one, should be less than 100 crores. And the startup cannot invest in certain assets for 10 years since the issuance of shares. These are certain categories of assets like residential property or, speculation in stocks. In these kind of assets, the startup cannot invest after availing the exemption on angel tax. Moving on. This is the mainstay. This is the most significant benefit available for startup. And let's see, what is this? Whoa, deduction of 100% profits. What that means is that for 3 years, you don't have to pay any income tax to the government. The deduction, the 100% deduction of profits is available to an eligible startup for 3 consecutive years. Consecutive being the operative word here. For any three consecutive years out of the 10 years starting from the date of incorporation of the startup. So for any 3 years, when the startup starts accruing profits, a great deal of profits, they can choose that for these 3 years, we would like to avail deduction under the section IAC. Because in the starting, a lot of startups incur losses or are not that profitable. So usually the startups avail this benefit towards the end of the 10 years term. There are certain conditions again for exemption. Like I said, the startup should be incorporated after April 1, 2016, but before April 1, 2021. It should hold a certificate of eligible business from the Inter-Ministerial Board of Certification. I think that is one important point. In order to avail this benefit, you have to obtain a certificate of exemption from Inter-Ministerial Board, which is constituted by DPIIT, and you have to apply for it online with certain documents, with certain financial statements of your startup. I can get into the detail, but for the sake of time, I will skip that. The third is, like I told you before, the annual turnover should be less than 100 crores. Otherwise, it ceases to be a startup. Now, this is for the startups engaged in manufacturing. There should be no transfer of machinery or plant which has been previously used, which will fall under that boundary of replenishing or reconstructing an old business. So the machinery or plant should not be used previously in any existing company. Otherwise, you cannot avail a benefit under this section. Now, exemption on tax on long-term capital gains. Long-term capital gains are the gains that you accrue when you sell a capital asset like land, like a share in a company, like an immovable property. Any asset you sell and you obtain that profit, that is taxed in terms of long-term capital gain. If you hold the asset for more than 2 years, then it becomes a long-term capital gain. But if you sell off the asset in less than 2 years, then it becomes a short-term capital gain. So for startups, there is an exemption on long-term capital gains. It is under section 54EE of the Income Tax Act. Now, it is only applicable. There are certain conditions again. For every benefit you avail, the startup wants to avail, there has to be a certain condition. One of that is that if the capital gains so accrued, they have to be invested in a fund notified by the central government within the 6 months from the actual date of transfer or sale of that asset. After selling the asset, you have, say, 10 crores of capital gains. You have to invest that amount in a central government fund in order to avail the exemption. And not just that investment, you have to keep that investment in the fund for 3 years, for at least 3 years. If you withdraw before that, the amount becomes taxable. And the maximum amount of capital that can be invested in this asset, which led to long-term capital gain, is 50 lakhs. If it's over that, you can no longer avail the exemption. Now, like I told in the beginning, a lot of startups, they accrue losses. They run in losses. They try very hard to sustain. And when finally when they start accruing profits, the backlog, the baggage of losses becomes too heavy. So for that, the government of India offers another privilege to startups, and that is the set off and carry forward of losses. Now, this is covered in the section 79 of the Income Tax Act. It is offered to every enterprise, including startups. But for startups, there is a special provision, and that is that the loss incurred will be allowed to carry it forward and set off against the income of the previous year, that is the current year, on satisfaction of either of these two conditions. Now, the conditions are that the 51% shareholding, that is the control of the company, should be in the hands of the promoters who were there in the year when the loss was incurred. The same promoter should hold a majority stake in the startup. Or the second is that if you have voting shares in your startup, then in the year in which the loss was incurred, at the end of the year, on the last day of the year in which the loss was incurred. So say we have 10 people who hold the voting shares. These same 10 people should hold the voting shares at the end of the year in which you are claiming to carry forward the loss against the income. Now let me explain in very simple terms. Say I have a startup and I incurred a loss of rupees 10 lakhs in the previous year. But in current year, I obtained a profit of 15 lakhs. But that makes, say I'm not availing the exemption. So 15 lakhs, that profit of 15 lakhs becomes my income as a startup. And there will be a tax on 15 lakhs, which would be quite more. But the loss of 10 lakhs, which was there in the previous year, I can carry that forward in this year, subtract it from my current income. Now 15 minus 10 is 5 lakhs. Now I have to pay income tax on only 5 lakhs rupees. This is what it means to carry forward and set off the loss. It leads to tax savings for startups, for every company. Now let's talk about the tax exemptions for individuals on long-term capital gains, which is related to their investment in startups. Let's see how that works out. I'm an individual now forget about a startup. I am an individual. I am a salaried person. Exemption is available to me as well on long-term capital gain if I invest in startups. How? Let's see. It is covered in that section 54 GB of the Income Tax Act. On any long-term gain, on the sale of property, if I accrue a long-term capital gain on a sale of property of sale of any asset, if I meet the following conditions, I can avail exemption on paying any long-term capital gain tax. And that is that these gains are invested into either the enterprises as defined under the MSME Act of 2006, as well as eligible registered startups under DPIIT. If I invest all these long-term capital gains as an individual, if I invest, say, I sold a piece of land, I benefited 10 lakhs from it. I invest these 10 lakh rupees into StartupJobIn. Then I will not have to pay any tax on these 10 lakh rupees. If I don't invest, I will have to pay long-term capital gain tax to the department, the income tax department. Now, the money from the sale invested should subscribe to minimum of 50% of more of an existing startup. It's not like that I can invest into, I can have just a 10% stake into a startup using those 10 lakhs rupees and then I will get an exemption. No, I have to invest, I have to subscribe to a minimum of 50% of the capital of a startup, and only then I can avail this exemption. The shares should not be sold by me or transferred by me to anyone else in the next 5 years. That is the other condition. And also the startup in which I'm investing should use the amount invested to purchase an asset only. They cannot use it for daily, day-to-day revenue expenditure. They should invest this amount as a capital to purchase an asset, and they can also not transfer this asset for the next 5 years. If all these conditions are met, I as an individual can avoid pay the long-term capital gains. So people who are accruing long-term capital gains can actually think of starting a startup, and by that way they won't have to pay the long-term capital gain tax. Now let's talk about a very beneficial venture provided by the CBDT, that is the Central Board of Direct Taxes, for ease of access to the startup. So there is a grievance redressal cell established specially for these startups to cater to their inquiries, to cater to their concerns, to cater to their grievances. There is a special grievance cell dedicated to startups which has been set up by CBDT, and it works directly under the control of CBDT member, a member of CBDT. Central Board of Direct Taxes has 6 members, and one of these members directly, controls this special grievance cell. So it goes right up to the top of the bureaucracy. And the modes of access, how you can actually lodge a grievance, get your queries answered, resolve your concerns. If you're a startup owner, if you're running a startup, there are 3 modes of access. First is, of course, you can physically send a letter to this address which is mentioned. It is in North Block, that is Ministry of Finance. And you can also send your concern electronically by email at the ID that is startupcell.cbdt@gov.in, and of course the telephone support is also available to resolve your concerns as a startup on these telephone numbers or the fax number. Now, these were the benefits in a nutshell offered by the income tax department to these startups in order to help them sustain financially, in order to help them thrive and be the next leader in the industry. But how actually can we avail these benefits? If I were to, run a startup, how can I avail these benefits? It's quite simple, actually. It's quite easy. Again, the government has stepped in and provided hand-holding support to the startup when it comes to availing these benefits. Now, the one thing to note is that the benefits available to startups are not automatic. They are provided only to the DPIIT recognized startups. That is the Department for Promotion of Industry and Internal Trade. You have to get your startup registered with DPIIT, and only then you can avail these benefits, these tax exemptions that we just talked about. How to register? It's very easy. You have to go on a website called www.startupindia.gov.in. You can file an online application, or you can use the mobile app by Startup India. This is as part of a Startup India program, which was launched by the government of India in 2016. So it's a very simple application that you can fill in and you can register your startup. There are a couple of requirements when you submit this application. One of them is that a copy of certificate of registration or incorporation is to be submitted with the application. You have to submit it. You have to scan it and submit it when you make that application online. The certificate of registration. So if you are a registered company, that the certificate which was provided to you by Registrar of Companies under Companies Act 2013, you have to submit a copy of that certificate while applying for registration. And the second is that you have to submit a write-up on the nature of business that your startup will be conducting, the kind of product and services that you're offering, and you have to explain that how these product and services that you're offering lead to innovation, lead to improvement, lead to development in the area of expertise that you're working in, and how much extent and how much potential your startup has for employment and wealth creation. After you submit this application, your application will be processed by DPIIT, and then you as a startup will be registered, and after that you can start availing these benefits provided you meet the respective conditions specified there. Well, that's all. Like I thought of keeping it short, but sometimes I went into the details. I hope that helped a lot of people who don't come from a financial background. Thank you so much for giving your time, your energy to this session. And now, if you have any questions about this topic, please shoot your questions.
Thank you so much, Ankur. That was really very informative. Now we have a good idea that how exactly the startups, jobs, founders can avail the benefits of the tax benefits. Now moving on, I open the stage for questions. If anyone has any questions, we have Ankur Tyagi to resolve all our queries. Okay. Now I have one question. What amount of tax is paid by the startups after the end of 3-year provision provided, the no tax payment provision provided by the government? Once that ends, then how much do they pay?
Okay, so once that period of exemption ends, then the startup comes under corporate tax, and the corporate tax today in India is 29% of the taxable income.
Okay, thank you so much. Okay, I want to know that what are these long-term capital gains? Just initial general definition will work.
Okay, great. I'm glad that you asked this question because it can be a very complex topic to understand for many people. So say I'm a salaried person and I save and I purchase a piece of land, say amounting to 20 lakhs. Now I've purchased this piece of land for 20 lakhs rupees and now I hold it. Okay, I purchased it, say in 2018, and now I go about my business. 2021 comes. It's been 3 years since I purchased that piece of land, which is a capital asset. Mind you, it's an immovable property, a capital asset. Now I sell it. I sell it for say 40 lakhs. The value of land has appreciated. Now I sell it for 40 lakhs. Now, adjusting the inflation into account according to the index which is there is a valuation department which values your piece of land according to the current value, right? If you paid 20 lakhs for it 3 years ago, adjusting for inflation, how much value it holds today. Now that value say comes out to be, I purchased it for 20 lakhs, adjusting for inflation, it comes out to be 24 lakhs. I sold it for 40 lakhs. So the profit, the income that I'm accruing is 16 lakhs. I'm gaining 16 lakhs from this sale. Now I held that piece of land for 3 years, right? So the tax that I have to pay this tax, 16 lakhs that I'm accruing as an income, I have to pay tax on that amount. It is called long-term capital gain tax because I held it for 3 years. Okay, the limit which differentiates between a long-term and a short-term capital gain currently for property is 2 years. Earlier it used to be 3 years. If you held a capital asset, a property, a piece of land for more than 3 years, then the gain became a long-term capital gain. But if I say I sold this piece of land within the 6 months of purchasing, then my gain would be a short-term capital gain. That is the difference between a short-term and a long-term capital gain. And the difference is because usually the taxation rates for short-term capital gain are higher than long-term capital gain. Now this I was talking about the property. Now say I'm purchasing shares. I'm purchasing shares of a listed company. For that is also an asset. Again, I purchase a share for 100 rupees. After say 1.5 years, it appreciates. I sell it for 500 rupees. So I'm gaining 400 rupees in the process. I have to pay tax on that amount. But for these shares, for investment in equities, the time limit which differentiates between a long-term and short-term capital gain is 1 year. So if I hold a share for more than 1 year, then the gain on that share becomes a long-term capital gain. If I sell it off before a completion of 1 year, then it becomes a short-term capital gain. And again, the rates are different. Usually short-term capital gains are taxed higher than long-term capital gains. I hope that answers the query.
I have one question. You have mentioned that how we can save on the long-term capital gain, and under section 54 GB, you have mentioned that the person needs to subscribe at least 50% of the share, which
Yes.
of any other startup. So it also means that kind of that company is selling or the founders are exiting from the business. So is it mean that you are now going to purchase a company? It's not investment, it's kind of purchase of company 51% and more.
It is called a controlling stake. So the idea is that when you're investing, you need to have a controlling stake in that startup. Only then the department will allow you the exemption on long-term capital gains. Now I need to clarify here, this is different from reconstruction of a business. So say I started a startup and after 3 years, I sold it to you. You had a long-term capital gain of 20 lakhs. The current subscribed capital for my startup is also say 30 lakhs. So you give me 20 lakhs, you subscribe to 66% of the capital of the startup. Now you are the owner. You have the controlling stake in the startup, but the period of startup will be considered to be started from 3 years before, from the date of its incorporation. So now you have just 7 years left to claim that exemption.
Thanks.
Moving to our another question, you talked about angel tax exemption. Does it
Yes.
cover the NRIs and the foreign entities also?
No. So that's a good question actually. So we were talking about the angel tax, and it does not include the shares which are issued to the NRIs or the foreign institutional investors. It does not include that actually. So if you are, issuing the shares to these entities, it will not be included in the amount being taxed as part of angel tax. It is the funding by the resident angel investors or the funds which are not registered as venture capital ones, or even the investment made by the incubators. These are the ones that are included. A list of entities are excluded, and that includes the one that you talked about, the NRIs, the foreign investments. These will be excluded from angel tax in order to promote the investment coming in from the foreign companies.
Thank you so much. Okay. Here we go with the last question. Can a layman register by themselves, or do they need any expert help? And if they do, is there something like a help portal or something provided by the government to them to help
Yes,
them
yes, absolutely.
to understand these benefits, because not everyone is the financial expert.
Absolutely. So the financial literacy in India is improving really by the efforts being done by the government, by their awareness programs and everything that the government is doing. And as part of that, it is very simple. Like I talked about in the last slide, it is very simple to register your startup. Anyone can do that. And talking about the support or a guiding document or anything, a resource being available. So yes, there is a PDF file available on StartupIndia.in, the website which I just mentioned. A step-by-step guide is available on how you can go about registering your startup and what exactly you need to submit. Everything is readily available, and it is the form that you have to fill out is so easy to fill. And again, for every column that you have to fill in that form, there is a guide available. So you need to download that PDF file, and then that PDF file, the step-by-step instructions you follow, you will be able to register your startup. Not a plethora of documents are required for you to submit, just the certificate of incorporation, and of course a write-up about the nature of your business. Those are the two things that you need to submit, and a simple form that has to be filled out. And again, a step-by-step guide in the form of a PDF is available to guide you through this simple process. So no financial background, no prerequisite knowledge is required for you to register your startup. Anyone can do that.
Thank you so much. I'm so looking forward to have my own startup registered very soon. Moving on, Rahul, do you have any question?
Yes, I have just one quick question.
Yes,
As
Rahul, please.
Ankur mentioned, it's quite easy to open a startup. So my question is, when an uneducated person, illiterate person, he or she does not know how to read, how he or she would fill the form, how he would see, like going to the portal and doing. So what is the qualification or any other parameters for a person? Are there any?
Well, there are not any qualification or parameter for a person to start up. Anyone with any set of qualification can, of course, run a startup. And regarding the help that is required, and if a person is uneducated, then yes, they will require help. They will require help every step of the way, because before registering yourself as a startup, there are a lot of other steps. In starting your startup, you have to get your company registered with the registrar of companies. You have to obtain certain permits. You have to apply for, say, a GST number. You have to apply for a PAN. So every step of the way, yes, these people will need help. A lot of helplines are available by different departments, by GST department, by income tax department. These people can call there and, get themselves aware, seek all the help that they can. But yes, again, in case of people being illiterate, yes, they will have to seek some kind of help in order to get it registered. It is being done for the ease of access, to provide for a faceless, paperless, contactless process in order to get the startups availing these benefits. So that is why it is being done online. And I think a lot of help is available in terms of support centers, and like I told, even a grievance redressal cell is available by the CBDT. So all these avenues can be exploited by such people.
Thank you so much, Ankur, for being with us and giving us such an informative session. Finally, I can say the enigma of tax benefits for startups has been resolved to quite an extent, and all the credit goes to you. In such a short period, you have talked about so much and in such detail that most of us now have a good idea that what all tax benefits can be availed and are provided by the government. Thank you so much for being here. We really enjoyed your session and hoping to have some more informative sessions from your end. Thank you
so much, Kavita, and thank you so much, StartupJob.in, for this great opportunity and providing me with a platform of sharing information that can really help the upcoming startups and the upcoming entrepreneurs. Thank you so much.